Nvidia's had a big run up with all this AI hype,
Right.
right? In the
So let's
last,
take a look at that. Let's just take a look at what's been going on in Nvidia. So I'm going to take a look at the post earnings drift here, just to see what happened to the stock after it reported earnings last time. In between that period, what did it do? And here we see that it's up 22.8%. So it's gained, after the last report, post earnings, it's gained another 22.8% up till now. So you could say that, intra-quarter very bullish. How does that compare? Let's just take a look at how it's done in the past. So these are the stats between earnings. So you can see the previous post earnings drift was 24%. Prior to that, 29, 32. So it's been doing that already. This is going to be the fourth quarter in a row where after the report, it just, there's obviously, you report earnings, the earnings are out, and then you got another, 3 months until the next earnings, right? So you still have all that time in between. What does the stock do? So that's what this is measuring. And you could see that it's been, making like some really big gains already, fourth quarter in a row. And if we look at the earnings reaction here, this is how the stock performed the day after reporting earnings. So reports earnings after the close. The next day, what does it do? So we could see here, it was up 14%. This one was up 24.4%. This one ended up unchanged for the day. This is what this, these are the earnings per share beat or miss. Same thing with revenue. But I think most of this, it's coming up based on future projections, because when you price in, what do you price in the stocks? Future cash flows. And right now, people are very optimistic about that AI, which I think, by the way, Altman, we're just discussing it this morning, Will, who got booted from OpenAI. I think one of the things he was trying to do was raise money, raise capital to design a chip or create a chip, manufacture a chip to compete with Nvidia.
yeah, I think that
That's
is.
that's one of the things I think he was looking to do. And then there's that whole drama right now going on with OpenAI. So this gives us kind of like a brief, just a visual of what's been happening with Nvidia. Very volatile here. And I actually I did put out an article on Nvidia, just looking at uh, one of our tools, and the idea there is that when you're looking at the markets are fluctuating, right? They're always moving around, and as traders, what we try to do is establish stable benchmarks that we could use to try to trade around, right? Some kind of guidance or benchmarks, perceived fair values, to help help guide our decision. And that's one of the tools that you would be using as a trader, besides, you got your risk management tools, your entire portfolio and all that. So the benchmark that I did write an article about, I posted it out, but it was trying to describe, so that we have here different stats around earnings. The one I was describing is the value of that earnings straddle. Where did it tend to close, right? So where did it tend to close right before earnings? And here we see that's what this is. Implied by option price is 7.2%. So let's just take a look at that first. So we have all these stats, but let's look at one at a time. So 7.2%. And when you click on here, right, this bar shows you where the straddle, the at the money straddle, closed right before the earnings announcement. And it's represented as the percentage premium over spot. Right. So what is the percentage? If you bought the call, bought the put at the money, what was the percentage premium over the spot price? Okay, and this is going back in his, so you could see here, that even that alone tends to fluctuate, right? So but now we kind of have a benchmark, potential benchmark, where this straddle might close, right? So what's the point here? Let's say it's the beginning of the day or the middle of the day. Well, it doesn't stay exactly the same. It could fluctuate, right? That straddle could be moving around, and it could, because you've got different players, it could be, balances to buy and balances to sell. It's going to move around. It doesn't stay at one spot. We have continuous trading going on. But we have a benchmark where potentially this straddle can close at, right? And using that could help guide your decisions. How far away is it from the benchmark? Did it deviate enough where it looks like a potential opportunity, or now you're making a calculated risk where, like, well, it's on the low end, and the risk of it going lower is less than the risk of it, and there's a higher risk, higher probability it could go higher. So these are the things you start to try to make calculated decisions. Okay, so what are some of the benchmarks that we could start using to help guide us, right? So one of them is we could take the average of all the end values, right? Sometimes they're higher, sometimes they're lower. They're never exactly the same. They have they vary, they differ, from period to period. And the first one, as data analysts, statisticians, whatever, you start with the average, right? So then we have this average. So the average is 7.2%. What else can we look at? Well, we could look at the range, right? Where if we the next thing in the data analysis, what do you do? You sort them, highs to lows, right? Show me the high, show me the low. So that's what it is. So the high 10.5, low 3.9, pretty wide range. As low as 3.9, I think, like right here, we close that. As high as 10.5, could probably visually see that there. But that's so now we have the range, and then we could look at is the median, right? The median is right in the middle. So if there's a skew one way or the other, we would be able to compare it to the median and see the differences. So here, the median and average is right on. And as we get closer to the earnings release, what we do is we have this little blue bar here. Okay, so you see it's a different color than these darker gray. Like this one's a light blue. These are like darker gray. That is telling us where the most recent straddle is. So it didn't close yet, right? We still have all day trading today. This is since yesterday's close. This is the last observation we got. And what we see is that so far, that premium, right? These bars represent the premium, right? Like here, you can see here, 5%, 10%, 0. So you see this dotted line. This dotted line is the average. That's the average of all of these. Okay. And right now, this blue, light blue, is yesterday's close. That's the premium, which looks like it's right at the 7.2, right? Actually, I think we're listed here at 7.4 right now. So it gives you, so far, the pricing has been, right at our historical benchmark. It's not far below, not far above. And if we use that as the potential close, it's basically, right there. It's not way too high, way too low. If anything, even if you, is there, and maybe if we think about it logically, if we think that that's where it's likely to close, right? If you do it in the morning and it's likely to close there, maybe theoretically there's slight edge, because then you would break even on the straddle, right? You buy in the morning, sell it at the end of the day, you break even. But that whole day, something could happen. The stock can still experience some kind of a move. Look at, sometimes they pre-announce, sometimes, you could have an economic event or whatever. So if you think that it's most likely going to end there anyway, like, think of it this way: you buy an option, right? If you're buying an option, and because you think something can happen and nothing happens, but you could still get out and break even, that's slight edge, right? Like, like, think of it as, oh, I bought a lottery ticket for $1. I didn't win, but I could get my dollar back. Well, that's slight edge, because you kind of got it almost for, you got it for free, minus cost for free. So the idea there is we use the assistance of data and benchmarks to help guide our decisions, right? We still don't know what will happen, but what do we think is likely going to happen based on like the historical behavior? So in this case, keep in mind, we're not talking about, we don't know what's going to happen on earning. This is a completely different trade, right? This is a completely different trade. This is basically saying, where do we think the markets are going to price the odds right before earnings? What are they? This is what we're looking at, right? Where's that straddle going to close before earnings? And then the earnings are going to come out. All right. So this is pre-earnings straddle. I called it the pre-earnings straddle. All right. So let's dig deeper, right? As data analysts, as researchers, what we want to do is start narrowing down this data, moving around, seeing how it could potentially change, because we want to see the ranges and so forth. So let's say we want to narrow this data down to third quarter, right? Because right now, Nvidia is about to report third quarter earnings. And does this data look different for third quarter than it does if we just looked at all of the observations? And we have these filters here to help us out with that. So let's go third quarter. And now the data got filtered for historical Q3, and we have new set of analytics. So here, what we're seeing is that the average end value, pre-earnings straddle, slightly higher, right? Instead of 7.2, we have a 7.5%. The max min, we got 9.3%, 5.6, a little bit tighter, but got less data in there. And the median is 7.4. So the median slightly higher, the average slightly higher, and this is where we are right now. So we're at 7.4. So yesterday, that's where we closed, 7.4% on the straddle. Keep in mind, we still have all day of trading to go, and it could fluctuate, right? Prices don't just stay the same. We have continuous trading, so this thing could move around. so that's narrowing it down to the third quarter, right? Let's come back to, and by the way, down here, if you're looking at the straddle, let's say it's the middle of the day, and let's say the straddle falls to 6.5%, right? Let's say that's it. Well, we could enter it here 6.5%. And when we calculate this, this will tell us how many of the historical observations were below 6.5%, right? How many times did that happen? So at the end value. So if we calculate it, right, well, this would say that 20% of the historical observations, the end value was less than 6.5%, 80% higher. So it's a little bit also of an assistance letting you know, okay, we're on the lower end, right? Like if you think, helping you try to estimate odds, right? Historical odds, well, there's a chance it could go down, but maybe there's a higher chance that it could go higher by the end of the day, right? Let's come back to here, and let's say that we're looking at all the observations and they go out to 2014. But then what happens is we could say, look, there's a different situation in Nvidia right now, right? It's in a different type of narrative. It's in a different type of a story that did not exist 10 years ago or 8 years ago or 6 years ago. We're in a different in a different period where now the stock of Nvidia is influenced by AI. There are more eyes on it. There are more interest on it that didn't exist in 2014. There are different players in it that didn't exist in 2014, 2015. There's a big difference between now and then, right? And I want to see the data that's more recent and not average it out or smooth it out with data that's from further away, because I think it's less relevant. All right, does that make sense? Where what I'm saying is that what Nvidia is doing now, the players in Nvidia, the interest in Nvidia, the people who are forecast, it's changed, right? It's different than it was before. So that's why I'm going to try to remove the data from before, just to focus on the more recent data points. So let's do over here, and we'll do the last 2 years. So I'm going to do the last 2 years. So here's how the data looked in the last 2 years, right? The average end at value on the straddle was 8%. Right now so it's even higher, right? So basically, if we remove the older data, the straddles look like they were higher on average. Median 7.4, so that's still close. Okay, it probably got pulled up here by this bigger outlier, and the min went up. But maybe slightly higher than if we just used all the data, right? Going all the way back. So now we narrowed it down, and now we could see the differences, right? That it's slightly on the higher than the previous data. So I'm going to end it here because we only have a couple minutes to go. What we're doing is trying to use those tools to help us paint the picture, establish what we believe are good benchmarks, good reference points to create our, theoretical fair values, theoretical values that we would want to potentially trade around or use as guidance for trading. So this is just one of the tools, right? I just concentrated on this one, implied earnings moves, and wanted to kind of show you different ways to, different ways to analyze it, different ways to look at it. And the question comes, well, which one do I look at? Do I look at all of them? Do I look at 2 years? There's no right answer. That's why you have, when you're studying data, when you're analyzing data, when you're trying to create your theory, you're gonna look at it from different aspects. That's what happens. You have to look at it from different and see how the data differs, and you have to get used to that to try to help guide your decisions. All right. So I can't say you should only look at 2 years, or you should only look at 5 years, or you should only look at 10 years, or you should only look at this quarter or not. When you're analyzing the data, you start looking at all of it to see, what does this data set tell me? What does that data set tell me?
Excellent job, Dima.
Okay.
Rob says thank you. Thanks everyone for joining today. Remember, we have a shortened trading week. I did put a link to the article also in the chat, and it's going to be sit on YouTube too. You have the link to the article. It is on our website, but we can show you how to search for that at another time. Awesome job, D.
All right, everyone. Thank you for joining. Stay safe out there. Have a great trading day. And hope to see you guys tomorrow.
Yeah, we'll see you tomorrow and Thursday. Remember, we're off for Thanksgiving, and then we'll see you on Friday. All right. Great job, D.